Hello everyone, Travis Freeman here with this month's Ask the CFP segment. This month's question is, what is asset location? Not to be confused with asset allocation, asset location is a neat strategy used by some financial planners. Now it's a tough strategy to implement, so either it requires advanced technology or a great deal of time from the planner. Asset location is a way to position certain assets in certain investment accounts for tax reasons. In essence, it's a way to locate certain assets in different accounts based on the tax consequences of the investment or the type of account. To make this easier, let's assume we have $1 million worth of cash to invest between 3 different accounts: a traditional IRA, a Roth IRA, and a regular non-IRA investment account. Think of it like a trust account. If someone wants to own 50% stock and 50% bond, they might invest this 50-50 mix in each account. Then each account owns the same investments with the same mix, so it all averages out to 50-50. I often see financial planners build portfolios this way. However, using asset location, we may be able to take this a step further. Rather than using the same investments in each and every account, we may first put the most aggressive stock investments into the Roth. Remember, with a 50-50 mix, we need about a total of $500,000 worth of stock. Now, if this were my portfolio, I would put the most aggressive stocks into the Roth first until I completely fill it up and use all 200 grand. Remember, as long as I follow the rules of the Roth, I may be able to enjoy tax-free distributions from it in retirement. Therefore, I want the Roth to have the most growth potential among all of my accounts. Now, I still need to put $300,000 worth of stock somewhere to get to my 50-50 mix. Again, if this were me, I would put the remaining 300 grand of stock into the non-IRA investment account, especially if I'm using tax-efficient investments that don't trigger a lot of taxable gains throughout the year. Another example of why I may do this is with foreign investments. Did you know there's something called the foreign tax credit? It's a credit you may be eligible to receive if you pay taxes to a foreign government using your foreign investments. However, you're generally not allowed to use it if your foreign investments are held inside of an IRA. Now we've located all of our stock into these 2 accounts. It's time to invest the $500,000 worth of bonds. First, I'm going to put the bonds into the traditional IRA. Since bonds may pay taxable interest throughout the year, I want them in my tax-deferred IRA to avoid paying taxes on that interest each and every year. We may have 200 grand worth of bonds to invest, so the only place I have left to put them is the non-IRA investment account. I would probably pick and choose which bonds I want in this account versus the IRA, again for tax reasons, but you get the idea. I've really simplified this process, but I think you can see that asset location offers a unique way to build a portfolio rather than just copying each and every account. After all, if you were going to move into a house, would you just put the couch and the washer and dryer and everything in one room? No, you'd put the couch in one room, the washer and dryer in another room, and the desk in another. You would locate them individually based on their purpose. If you are not sure if your financial planner is using asset location, reach out to us and we'll take a look. You can also visit our website to see if you may qualify for our services. If you're already a client, we are already on it. If you have a question you'd like to submit for next month's video, please send it to tfreeman@rfgadvisory.com. Thanks for watching, and I'll see you next month.